What's up, crypto community? In this video, I want to share a couple of articles with you all. None of these have to do directly with XRP, but I still think they're pretty good. So let's go right ahead and get into this here. According to a recent report from Bloomberg, institutional investors don't have much of an appetite for digital currencies. The opinion comes from one Nikolay Staronsky, who formerly traded for Credit Suisse Group AG and runs Revolut Ltd., the latter being worth more than $1 billion after users providing the ability to speculate on Bitcoin and Ethereum. Staronsky stated at Web Summit 2018 in Lisbon, unless these big institutional investors and hedge funds move heavily into the crypto world, I just don't think banks will move because they simply try to make money from their clients. There's no interest from big institutional investors so far. That's just really not true. There's been so many institutional investors that have plans to get into the cryptocurrency space. But let's continue reading here. Bloomberg's report on Staronsky's bearish statement also includes a graph which can best be described as a classic Bloomberg. The majestic work of art appears to be the product of someone's boss demanding that the artist just make one giant downward channel, as if that is the best way to convince readers that cryptocurrencies are falling. There we go, and that's that picture. There's a phrase often reiterated by one Alessio Rastani, a popular trader and YouTuber, which goes something like this: there exists information for the classes and information for the masses. Staronsky's statements and Bloomberg's charts most definitely belong to the latter category. In actuality, there currently exists no interest from retail traders and average Joes who got wrecked once, twice, or thrice over the course of the year. The fact that retail traders are no longer playing along is evidenced by the dire lack of BTC trading volume across every major exchange. While mainstream media outlets continue to present flood-filled information for the masses, you can all be assured that smart money and big institutional investors are in full accommodation mode with their eyes firmly set on the next 5 years. Do you think institutional investors are already getting involved in crypto, or is Staronsky right when he says there is no interest? I recommend you go check out the Digital Asset Investors channel. There's a whole bunch of channels, but that's one I definitely recommend you check out. It's quite clear that banks, institutions, institutional investors are gearing up to enter into the cryptocurrency space. The current market cap for all cryptocurrencies right now is only $213 billion. I definitely think there's going to come a time when this market cap is in the trillions. It's just going to take time, as the foundation for blockchain, the foundation for cryptocurrencies is being laid. But once that foundation is laid, then the institutional money is going to flow into this market. And here's another article here. Binance eyes crypto dominance and increase of corporate investors. Binance, the world's largest cryptocurrency exchange by volume, has been making moves to attract high-volume traders and establish itself as a global powerhouse. It recently opened a new headquarters in Malta, expanded to Jersey and Liechtenstein, and launched new exchanges in Uganda and Singapore. So you can see there's growth and maturation of the cryptocurrency industry. Tiered trading discounts have sparked activity from institutional investors, and this is showing that Binance, as part of its strategy, is to focus more on supporting corporate account holders with a straightforward registration process. Users can create an account, upgrade to institute corporate level, verify themselves, and once the application is approved, they can withdraw up to 100 BTC a day. So you can see there are all of the the mechanisms for institutional investors to come into the space are being laid. This is happening. So yeah, it's happening. Binance explains that their API system is a key component. To ensure maximum security, we offer multiple API access levels with customization for transfer trading and read-only permissions. Furthermore, we have settings to limit the addresses that funds can be withdrawn to, preventing withdrawal of funds to a foreign address. The exchange is also providing new services to traders of all levels. Our new division, Binance Research, provides an open access institutional grade research reports on blockchain projects with an eye on increasing transparency and improving the overall quality of information available within the cryptocurrency space. Several new features will roll out in Q4, including support for up to 200 sub-accounts, no free transfers of funds between sub-accounts, and full control of sub-accounts, including resetting 2FA, removal of API keys / orders and passwords, or even freezing the sub-account. Despite the epic growth of Binance, CEO Changpeng Zhou recently said in an interview that he would not recommend spinning up a brand new exchange, particularly now that trading volumes are down 90% from their peak in January. In my mind, this was expected, considering that was the biggest bull run that the cryptocurrency market has ever seen. We're now in this bearish year. However, institutional money and the platforms for institutional money to enter into this market are being laid down. So I think there is definitely going to be another bull run at some point, and I think it's going to be much greater than the one we previously saw. Starting an exchange is always a really bad idea, to be honest. It's never really a viable business model. The chance of success is very low, probably lower than most regulated internet startups. Exchanges is one of those hard businesses to start and run, regardless of the market condition. I think right now people have definitely slowed down a bit, but I believe there are still more exchanges than there are coins. So there are still more people trying to do exchanges than there are starting other projects. But running an exchange is still really difficult. You've got to. Okay, so I'm not even going to continue reading that, but exchanges are popping up all over the world. Blockchain technology is becoming more and more known. Cryptocurrencies are also becoming more and more recognized. Like I was saying, the platform for institutional investors to enter into this space is being laid. I should mention that I'm not a financial advisor. This is just my opinion. I've only been in cryptocurrencies for a little while, but what I do is go to people that are far smarter than me and see what they have to say about cryptocurrencies and digital assets. And what I'm pulling out of it is that, we're seeing the birth of an entirely new asset class, because and particularly with XRP, if you send XRP to someone, you realize how fast and efficient it is, and that's a revolution in the way value is exchanged. Value is now flowing extremely fast, and that's why I don't see digital assets really going anywhere. And I think XRP is kind of leading the way. Why? Because it's working with institutions, it's working with banks. There's real world utility. XRP serves as a liquidity provider for cross-border remittance payments. That's a real world use case, and on top of that, they have countless partnerships. So I think digital assets are not going anywhere. Anyone who says they're a bubble, I completely disagree with that. I think they're only going to continue to grow and thrive, and I think we are going to see the market cap in the trillions. I hope y'all enjoyed this video, and I'll see you in the next one.